the end of the week, of course, we had the big speech by Fed Chairman Powell, which, as expected, I would say, was sort of somewhat hawkish, as they say. Let's welcome Peter McGuire, CEO of XM Australia. Peter, it seemed the comments by the Fed chairman on Friday pretty much shook every market except oil. Oil stayed on the beach drinking pina coladas.
Absolutely, Sean. 101 for Brent, 93 for WTI. And good morning, Professor James, and yourself, Sean. Greetings from sunny Sydney. Sunday in Sydney, the end of winter. We've just been on the beach swimming at Coogee. So it's just had a big run up, and the Fed chair's pain for households ahead. That was probably the major concern that I think is going to hit everyone on Main Street. There's no chance of any pivot. We're looking at hands on the wheel and rate hikes certainly for the next probably couple of months from the Fed chair and ECB counterpart. Inflation, the storyline, Sean, and you've seen those equity markets. Nasdaq was down 4%. That was their feeling towards it. So US dollar being pumped up nearly at 109 for that US dollar index. So it's been a very solid move. And have a look at the euro. You'd like to be a US traveller going through the Champs-Elysees with a pocket full of euros, wouldn't you?
Well, it would be nice to still be on the holidays, but Peter, why do you think oil prices didn't respond on Friday to the speech by Jay Powell, which in summary essentially said, I think once again, you might say, but nonetheless, that they're going to continue their interest rate hike program and they're going to hold it for a sustained period of time? The 1 and 1 is 2 of that, you would think, is higher interest rates for a longer period of time. Okay, destruction to economic activity and hence demand. Yet the oil price didn't react that way. Why do you think the oil price was fairly agnostic to the comments by this Fed chair?
Well, I think that a lot of the reality was that they sold equities and they were hit hard. And the next part is you've had a bid up as far as currencies, that US dollar. So that's probably where the smart money traded because of comments coming from Fed Chair Powell that we're going to see a continuation uplift. Is 109.50 the new handle for that US dollar index? As I said, we're just under 109 now. We're at 108.84. And that's where I think the smart money was all trading across currencies. The oil markets had been bid up over the last preceding days, and I don't know whether traders looked at other markets, Sean, as far as better opportunity. That's probably all I can put my mind back to, the days on the NYMEX floor. If you're not buying oil, you're buying dollars, and that was probably where easier money was to be made.
Peter, the other big story, as it always is every week, you would say, is all things China. China there seems to many parts of the world, but particularly extreme drought over the recent weeks of the summer. Hydropower severely impacted the ability then to deliver the water that's required into agriculture, etc. The dominoes from that, never mind the dominoes from COVID. Your thoughts on the outlook for China, and again, you would think a somewhat bearish pillar in the current $100 oil price.
Exactly right, Sean. Yes, certainly bearish, and you've taken on board those weather outages and what's happening as far as the agricultural base energy consumption and how they're moving forward with domestic growth. The word on the street as far as debt holders of the property sector accounting for 33% of their GDP or their overall economy is that's unwinding. You've got mortgage holders not paying mortgages. We all understand that a lot of their properties are bought off the plan. So they buy off the plan. They pay for those mortgages. That's how developers seek funding. They don't do it the other way around like they do in Australia. So the work through all of that is going to be, as we lead up to Christmas, is this going to materialize and really start to shake the foundations of the debt holders, of international banks, and the whole property sector? What's happening with China internally? And, we understand the COVID situation still hasn't been really officially put to bed. And yeah, they've got their hands full. I noticed that stimulus that came through probably about a week ago, or maybe been early last week, certainly underwhelming. And I'm just, sitting here observing China, seeing what the opportunities are.
Are we seeing any of that translate into, obviously, most of Australia's biggest companies, mining in particular and elsewhere, are heavily interwoven to the health of the Chinese economy. How is that translating into Australian economic outlook and these companies and so forth? Are you seeing that translate?
Well, Sean, overall, I mean, everyone that wants a job in Australia can get a job. That's the first part. The second part is they say they've got inflation under control. We're ticking there at about 6%, but we run it every 3 months. So it's not as though we've got, figures dropping like a lot of major economies that are dropping every month. So we get a more realistic number. The RBA's got they're scratching their heads. How do we move forward? They understand the fragility of the, as far as wage growth. The services sector is doing okay. A lot of people still not going back to the workplace. They want to work remotely. But when you're looking at the mining situation, what China wants, China gets from us. If it doesn't want our wine, it doesn't take it. If it doesn't want our canola, if it doesn't want other commodities and seafood and so on, but if it certainly wants, iron ore and different base metals, they put their hand out for that, and we certainly ship it appropriately.
The big thing that made, in a way, the Jay Powell's comments on Friday to be defined as hawkish, and indeed for them to be presented as such, is because the markets are ignoring his comments, or the other members of the Federal Reserve over recent weeks. We're going to do what it takes to get down to 2%. Market, blah, blah, blah. Yeah, we're going up. We believe next year this is a up the mountain, down the mountain thing. And the market was sort of building in and ignoring a sort of tone. I think, if anything, Jay Powell was trying to, slam the table on Friday and say, listen, this is serious, pay attention. My thoughts to you on that is, this is the rigor in which this inflation holds, and the scale in which the Fed and other central banks across the world are going to have to, how high, how strong, how severe does this, when we've got $100 oil, ignoring on Friday the announcement by the Fed. This inflation is quite robust. Your thoughts on, James started his comments by saying he kind of expected the markets to continue this week with that somewhat upward trend again. I mean, in terms of financial equities.
Well, first off, I wouldn't be surprised, Sean, that oil has a little bit of I'm not saying a run, but I think it's going to be, this time next week, it'll be higher than what it is right now. If you're looking as far as equities, don't take your eye off the ball that we added 7 trillion with a T over that 8-week period or 9-week period from June on US equities. And a lot of traders are saying the general, the mannerism wasn't bullish for the stock buyer. It was the unwinding of all these hedge fund positions as far as shorts, put options and so on. So as the traders realized that they wanted to actually close those positions, the market moved up, but the consumer, or the appetite as far as day traders, they haven't been long. So they haven't seen, this is according to prime brokers. So there's the first part from an equity standpoint. The second part, building on what James mentioned, that, £10 for a flight. Yeah, I mean, it's just, you wouldn't, the taxi fare would cost you 3 times that to get to the airport.
That was certainly against trend of anything I've heard recently in terms of, I mean, we just had a big story on the Dubai radio on Friday about the route between the UAE and India, which is about over 100 flights a week, and their prices are through the roof, 5,000 plus dirhams for your average economy ticket, from which is essentially a low-cost flight 2-3 hours from Dubai to India, it's through the roof. So James's narrative is certainly not one I've heard. But please continue.
Well, I mean, the hurt as far as Europe and certainly the UK with energy prices, and I think that consumers are realising that, and they're starting to tighten their buckles, as James said, as far as hot water consumption. So all of these factors are going to play into the market, and I think the consumer on Main Street is hearing they're turning up the tempo. Their ears being twisted, and they're realising this damn thing called inflation. I don't quite understand what it means, but I understand this, that when I go to the local high street and I buy my groceries, because my auntie tells me to buy this basket for her, and she gives me £40, but the trouble is it doesn't cost 40 anymore. It was 40 this time last year or 2 years ago. Now it's 70. And this is the issue that's hitting everyone on Main Street. Every single consumption item is being ratcheted up. What is the true price of inflation? Is it 10% or is it really 35% when you think of the price of coffee and all the input, stud lumber? You want to do any renovations to your home, you want to do some building work, you want to buy goods, services. I tell you what, I think it's a lot higher than 10%, Sean.
I would agree. And on that point, Peter, when we're talking about the impact of obviously Jay Powell, Federal Reserve, he's got one real tool in his toolbox now, and that's to raise interest rates. But we're still talking about historically very low rates, even though they're moving in a big way. The 75 basis points is a big number, but the nominal number is still very low, 2.5%, maybe 3%. These bionic companies, Google and all of these fellas, will easily digest that kind of price of money, no?
Yes, I think they will. Yes, you would think so, but the hurt to the consumer out there has been immense, and the other side of it is the cost of doing business to people wanting to start business or to take on further debt. Mortgage rates and so on are creeping up. So there's less firepower. If you haven't gone out and negotiated a wage rise, and you don't need 2%, you need nearly 2% a month to match what you're doing as far as inflation, then the hurt is certainly held in the wallet and the purse, and the consumer hasn't got the firepower to live I think those goods and services that we like to do, the dining out and so on, it's being crimped. I'm hearing this as far as the cafes and all of that across Sydney. We've got a staff issue, but we've certainly got the other side, which is the consumption side, is starting to be throttled a little bit.
I think what will be interesting going forward, and it's already something to keep an eye on, and that is the P ratios, the pricing multiples of equities. What is the number that is fair value as they drop off? They had dropped dramatically in the second quarter, but they've since come back. Peter, picking up on that and your closing thoughts, inevitably Wall Street, the city will have had a chance to digest Powell's comments on Friday. There's still a data point or two to come in before the next Fed meeting. Non-farm payrolls next week. Your thoughts?
Well, I think if we look last month, Sean, they shot the ball out of the park. We were tipping 250 and they doubled that. So it was very, very bullish. The general consensus at the moment is going to be weaker this time round. And, maybe that 230, 235 sort of handle is the number that I'm seeing quoted. So it's a very difficult number to be correct in your assumptions, because there are so many different frameworks that impact price. Pardon me, not price, but the.
Do you think whatever number it is, do you think it will direct or determine the direction of the market's perception of the next Fed move?
It's going to have an impact, Sean. I mean, if it underwhelms, it's going to be a little bit of a wake-up call, and that's going to add more problems to Fed Chair Powell and his decision-making. And if it's a high number, then it's probably pedal to the metal and they hit 75 basis points. So, yes, it's not an easy position for Fed Chair Powell and his gang.
Does 50 basis points signal more equity rallies? 75 does the opposite?
I don't know whether it really has too big a difference between the two numbers. It's just I want to see I'd love to have a crystal ball to look at the 28th of September in a month's time and see where US equities are, because I think it's going to be very volatile, and you're seeing, push downs of 4% on the NASDAQ, what we experienced on Friday night. I'm expecting some showtime over the next couple of weeks as far as volatility.
Well, let's just get this little survey result that we've done here before we put it out on the web. So neither seems to be the dominant answer. Higher inflation, that's a third. Looking forward to the week ahead and somewhat beyond, we do have the big noise of the U.S. election kicking in, and it seemed in some ways that as James made, or Peter, the reference to the fact that Biden or Xi will not be looking to stir things up, as both face a fairly important quote unquote re-election. And interestingly, they seem to have a truce last week, which we didn't even mention, but that China and the United States actually agreed on something for a change, which is the idea that there was a big move in the United States to recalibrate how they value Chinese companies listed and how they audit Chinese companies listed on the US stock exchange. And the mouthpiece of the Chinese government, the Global Times, wrote an op-ed praising this agreement as a symbolic case of how these nations can work together and so on. But the move towards the China political moment and the US political moment will certainly start to have a big noise and a big, what's its relevance and impact? I don't know. We'll have to see whether inflation becomes hyped up even to the even higher levels because it becomes the political hot potato or not. But clearly, it has an impact. Thank you so much,
a big one,
Peter and James, for your insights, for joining us on Sundays. Hopefully, we'll have you back again soon.